So, Henry, I'd love to understand what you're really building in AgriDex and what is the problem that you're solving.
We're building a digital marketplace for agriculture that removes the friction that exists in global trade. There are hundreds of different countries. Every single one imports and exports food. So, what does that mean? That means lots of different currencies, lots of different legal jurisdictions, and all of them can become confused with each other. If you're a trader from Gujarat importing cocoa from Western Africa, historically you would go to your local bank account, you would have an LC created, it would be in rupees, it would then pair to US dollars, that would then pair to the local currency inside of West Africa. You would both have to go to separate lawyers, you would have different schedules set up, it would take months of trading and lots of different economic input from both sides to be able to eventually branch together and trade. Whereas with our system, it can be done in a matter of hours. What our system, AgriDex, does is it uses blockchain technology to allow one unified way to speak to each other. And when I say unified way, what do I mean by that? I mean, we use smart contracts to have one single legal jurisdiction to allow the transfer of products between two counterparts. And we use stablecoins to allow one instrument of settlement. It's a little bit like the way cell phone technology really helped an economic boom in rural India and rural Africa, where I grew up, because it allowed people to suddenly have instant access and leapfrog those historical legacy issues of fixed landlines. Some of the new technology that we're bringing in allows you to circumvent the historic issues that exist.
Okay, that's wonderful to know. So you took the example of Gujarat and you mentioned that someone from Gujarat wants to import cocoa from, say, Ghana. Now, typically in India, when you arrive at the port, there are certain documents which are required for the shipment to be cleared. And the moment you need to make any international payment, which is linked to your physical shipment of goods, your local banker would require you to submit a few documents to say in which currency the amount has really come in. Do you mention that it has come in a particular blockchain cryptocurrency? And have you faced any such regulatory difficulties when it comes to certain governments, especially in the case of India, if at all?
Yes, yeah, it's a really good point. So we don't actively trade at the moment with India, and I'd love to be rolling out more in the region. But it's a really interesting point that you make about what counts as delivery. So in trade, there's a line of different delivery points called Incoterms. And Incoterms start from I'm picking it up at the person's warehouse where it's been produced, right up to DDP, which means the duty is paid and it's delivered right at the person's house inside of the country it's being traded to. And you have different set terms. And so certainly what I remember from when I used to trade with India is we would often do things like FOB, which meant we deliver it right up to where it's on the boat at the port, but before it goes into Indian customs on the port side ledge. Then it's up to the local communities who are buying it to then clear it through customs and provide all of that necessary documentation to assure that there's no issues in terms of externalization of foreign currency, because I know that's a very firm thing in India. But how do we do it in other countries? Well, we do a lot of stuff in South Africa. And South Africa, a little bit like India, has quite a strong administrative history and a lot of documentation. They also like a lot of certification, and that's important. The great thing about blockchain and the great thing about our system is you can load up the documentation anyway. So there's an AI scraper that also asserts whether a lot of this documentation is real or not, which is great. It sort of helps with the defrauding of the process. But in all of the trade that's going on, a range of different documents are uploaded. And depending on your Incoterms and depending on the country that you're going to or from, you can upload that important documentation. So you can put all of that in. It just depends on the Incoterms that are laid out.
Got it. So, would you say that there are certain countries right now which are very open to trade happening through, say, like an AgriDex platform where money is transacted? And from a paper perspective, there is no problem. The reason I ask this question is I know a number of traders in commodities globally who what they do is they do a lot of high sea sales. So, it could be a person from India, but they'll pick it up from, say, something like a Vietnam, and they would want to ship it to a country in Africa, and they would set up their entity in the UAE, which is just engaging in this trade.
I'm really glad that you asked that question. So, as you said, there are a lot of, let's just take Indian traders who they're moving stuff from Southeast Asia, they're moving it to Europe. but they silo the company in the UAE. Why do they do that? Because they want to be based usually in English company law. They want to be based in an international legal system that's trustable. Well, the amazing thing about AgriDex is we're one of the first people to take advantage of something called Ricardian contracts. Now, Ricardian contracts mean that under the new Digital Enforcement Acts that came out in the UK in 2023 and 2024, by using our system, you're bound in by English company law, no matter where you're trading on the planet. So if you are exporting, as we said before, cocoa from West Africa to Gujarat, if you wanted to, if there is a dispute on the high seas, you can action that process in the English high courts. And I know that with a lot of the free zones in UAE, that's based on English company law, and that's why traders from around the world want to be based in that. They consider it best in show because it tends to be one of the few nice holdovers from England's history is the basis of English company law. And almost everywhere uses it apart from France and America. And that's an amazing benefit of using our system. I'd say if you get trading, and it's amazing that you asked this question, it's probably the best thing about our system is that people have a level of, I wouldn't say legal surety, but at least ability to act.
So, are there also certain specific commodities that you're seeing a lot of trade happening on your platform for?
The commodities you're seeing the most of are the ones that have the most friction in their system. So we do a lot of cocoa out of West Africa. Why? West Africa doesn't have the best roads. It's got very difficult local legal jurisdictions. A lot of people there suffer from access. It has a lot kind of held against it. You're going to see a lot less of wheat out of northern England because they don't necessarily need our system in the same way. A lot of stuff is already pretty good. One of our first trades was wine out of South Africa, and we're growing our portfolio there. And then probably the biggest one of all is fresh produce. So fresh produce tends to be produced in Southern Africa, put on planes, and then flown to Europe and America. And what that often leads is a need to then re-internalize those capital flows. And instead of doing it through the banking system that take 5, 7, 9 days, it's a much more direct payment structure.
So what I'm hearing is that in case you intend on trading with a country or in a commodity where there isn't a prior history of your country trading with that particular geography, because of which maybe the systems or the trust has not been developed over a period of time, this gives you a way to enter into a smart legal contract with the seller from that country, so that only when certain specific conditions are fulfilled does the money actually go through. So your money is actually safe and it doesn't go to an intermediary who's going to release it, or you will feel, okay, I didn't really get the kind of produce of a particular quality and standards that I wanted. Till the time you're not absolutely certain that produce has been delivered, you would not be releasing the transaction. Do you think this is one use case which this is best for?
I think you're 100% right. And I think if you think about chatting to your parents' generation using some of the local banks in the 80s, the fact you had to stand in a 4-hour queue with your document, seek permission for this, that, and the other. There was this labyrinthine sort of track that you had to go through to often access certain infrastructure. Bits of Africa are still like that. They haven't had the opening up you guys had in the 90s. They didn't have the opening up that people in England had in the 70s. They are still in the same legacy historical infrastructure issues. And I think people massively underestimate that. It's not a matter of scale. Most of the people using our system, they're not small scale farmers. These guys are enterprise level traders. They're trading $1 million a month or larger. But because of where they're based in the world and the structures that are in place there, it's really not very good. They still have to send runners into their bank to wait 6 hours, to give certain documentation, to be able to make one payment, to then come back. The human cost is very, very high. And so for us, as you said, we're putting in the right structures to allow physical hold to swap from one buyer to a seller, but we're also leapfrogging some of that legacy infrastructure.
So, sorry, if I could just jump in to just break down the platform, right? From what I've
Yeah,
understood, there's three main parts to the AgriDex platform, right? There is the payment simplification. So you use
yeah,
stablecoins to sort of simplify the process of payment. Then you've got like contract simplification. So you use Ricardian
yeah.
contracts. They're legally enforceable, unlike smart contracts, which I found very interesting. And then you have this whole buffet of support functions, right? Where you've got like KYB and customer onboarding, you've got dispute resolution, you've got fulfillment tracking, you got taxation, subsidy management, and like all of these other things that you do. I think it might help everyone if you can take one example of any of these trades, let's say wine in South Africa or cocoa from
Yeah.
West Africa, and just give us like the end-to-end flow of, okay, I'm a farmer, I would go and sign up, I'll get verified, I'll go through the marketplace, find a buyer, then my goods will go somewhere and I'll get paid. Right? Can you just paint a picture of what the entire flow is for one product line?
Sure. I am a vineyard in South Africa. I get introduced to the AgriDex system. I then give my suite of documentation, which is reasonably labyrinthine. We have to do very firm KYB for precisely what everyone thinks. The wrong people can be involved in currency and financial flows. So you go through a list of KYB, including your UBOs and key stakeholders in the company and all of the other company documentation that is necessary to onboard. You are onboarded to the AgriDex system. You upload documentation showing the products that you wish to sell. In this case, let's say a range of your red wines with all of your information thereby on those products. You are then paired with an end buyer who wants to buy this, let's say in America, who's also done his same level of KYB. He's on the system. You then choose the Incoterms of delivery with this person. You then choose the payment terms. It could be immediate. We now have credit functions, so you could choose to be paid immediately, but that person pays only after 90 days. There's a receivable financing element. It depends. But let's say that they choose FOB, payment on delivery on boat. You then upload the phytosanitary documentation, all of the other necessary customs documentation to be uploaded at the port in South Africa. You are then paired with a logistician who takes it to the port for you. And that's it. The products are then trucked to the port, loaded on. The ship is then sent over to America. Once it lands FOB, the USDC through our Circle Mint account is then sent from one wallet to the other, and the trade is finalized. Now, what we're building, which we have on the website, and we're really, really keen to do as our next step post this raise, is to add in the IoT trackers. So at any point along this journey, you can register and see on a map where your products are. Because I think it won't necessarily be you spoke, Sarkat, earlier about what's profitability and what's revenue going to look like. I don't think that the tracking mechanism is particularly a profitable aspect of the flow, but what it does do is it helps traders feel more comfortable in using the system itself. So it's almost a loss leader, but they go, okay, so here it is on a map. Here's my product moving around the world. And I think it helps to allow people to visualize where this is all going and how it's operating.
Based on the KYB process you described, what's the minimum threshold for a trader to work with AgriDex today? Is it $1 million a month in sales they should be doing, or what's the scale there?
If I look at some of the vineyards that we do, they're doing $1 to $2 million a year. I don't think there's necessarily a threshold on turnover, but what we do look for is seriously run companies that are going to behave in the right way on our system, because we're still in growth mode, and the last thing we want is people putting in unreal documentation, trying to behave in a counterintuitive fashion. So at the moment, we're almost trying to behave like it's a closed wall garden. Everyone who comes on gets a very thorough vetting before they have access to it. Because once you're on the system, everything is reasonably to zero cost to use. The stablecoins you can transact with near free of cost. The credit that you can have access to is below often localized banking rates. We're trying to build in insurance products. Again, hopefully they'll be at a lower cost than what is available. So you get a great benefit, but it means that we only want good faith actors on the system.
And you said then you get paired with a logistics partner at some point, right? Once you upload your documentation, your product.
If you want. Often people choose to just do their own logistics because it can be come in at a lower price. But we were quite lucky to take investment from two major logistics groups at the very beginning of this journey. So we often have a sort of preferential setup with them if people want it.
And that's the part where you're saying that you want to get the IoT devices in so you can track and ensure quality there. Like as of now, how much of this is you having feet on the street? Like, do you have people who go to these merchants and verify them physically, or do you have issues of spoilage, or how do you manage some of that?
We haven't so far, but that's coming. I think that the journey will be more and more, as you said, feet on the street. We have a South Africa office now, we have a Kenya office, we have an office in West Africa, precisely because those are the places that we're in. And I think, as you said, it would be impossible to ever open up a trading line without having boots on the ground in that particular place. So, as we said, we don't do anything with India. If we did, we'd need to hire out a local office and have a team there. But I think also it's no matter what the technology says, I think it's impossible to operate in a jurisdiction unless you have people on the ground. I think it's at best unrealistic and at worst deluded to say that, well, we're going to operate here and not have full legal opinions, an office structure, and various people on the ground checking on those products and checking on those people.
You mentioned stablecoin for payments, right? To sort of clarify for everyone, stablecoins are basically tokens issued on a public blockchain which are one-to-one backed by a fiat currency, right? So a USD stablecoin is basically someone taking, let's say, $1 million, placing them in a bank account, and then getting a certificate saying that, hey, I've put $1 million in a bank account, and then issuing 1 million $1 tokens on a blockchain like Solana, Ethereum, Base, or whichever chain you choose to issue on, right? The biggest company that does this is called Circle. And why would you do this? Because it just becomes cheaper and faster to move money from one person to the other without having to go through intermediary banks, payments, processors, and fees. But how do stablecoins work in the context of someone who is actually producing wine or someone who's receiving it? Because there's on and off ramps involved, right? Because in most parts of the world today, you still can't pay for things with stablecoins. So what's the on and off ramp flow like for these payments?
If we go back to stablecoins in general, right? Like, what was money originally? Money was a paper representation of gold. You would historically be able to take your paper money, go in and swap it for gold. After Bretton Woods, people just became comfortable with the idea of the government itself. You got rid of the gold standard, you went into paper. So paper became the mechanism of trade itself. And I think all stablecoins is stablecoins is now the representation of the paper. So in the way that paper used to represent the gold, the stablecoin represents the paper. You can take that stablecoin if you want to wherever it originated from and get that paper. So what a stablecoin is at its best is a digital representation of cash. And especially in emerging world places where you either have higher crime levels or simply just degradable paper money, it's actually much more preferential. It's much more preferential to sit in that wallet, even as your own savings. So our big education point, and it's a process, is to educate people using the AgriDex system to staying on stablecoins more and more. Because once they see the benefit and they realize it's real money, that's the kind of the step that we always try to surpass. And I'm sure you guys know some of the most conservative people in the world are farmers. So when I first go to them and say I have some magic digital money, can you sit in it? They don't trust it. That's our biggest problem is always education. So what we start with is we have an inbuilt, and you mentioned this earlier, and for people who don't understand what this means, we have an inbuilt on and off ramp system. Now, what that means is that we have a pairing mechanism that allows your stablecoins at a cost on our system to go into retail accounts in whether it's South Africa, Kenya, Ghana, Zimbabwe, and it allows you to go back into your local currency at a cost. So if and whenever they want to see that, they can pay a small charge to go straight back into their fiat money system and be able to withdraw capital at the bank. Now what we're trying to educate people to do is only to take money out of the system to pay their farm laborers, to pay any of the local currency purchases they need. But the majority of international traders actually have a very low amount of local costs. Outside of their local, say, accounts team and local sales team, most people's costs are international. They're buying in their fertilizer inputs if they're a farmer. They are paying their international debt if they're a corporate. They are paying their lending lines if they're a trader. Most of the time, people actually use USD anyway. And by going into, let's say, rupees, by trading into rupees and paying a charge, at some point they're going to have to trade back out again into dollars. They pay twice. Much better to educate them to say, look, we have inbuilt fiat ramp systems. They do cost a bit of money, but whenever you want to pay your local labor force, whenever you have local costs, fine, we can give you that technology. But otherwise, sit on the system.
Okay. I think listening to all of this, I have so many questions. But before I start off with the questions, I think my biggest concern is I constantly deal with a lot of my clients who are very traditional in their approach. The moment I were to bring up this conversation to them, suddenly they'll all be absolutely afraid of entering into a transaction which they would think is possibly not approved by the Indian government. Right now, I know there are beautiful Alfonso mangoes coming into India from the country of Malawi. You would see even during off season, huge shipments of Malawi mangoes come to the port in Bombay. Even before they land, people have just booked cartons and cartons and they're getting shipped to Delhi and Bangalore and whatnot. Imagine today, I understand I have access to customers in certain part of India. They have the willingness to pay, and I wish to directly get in touch with a farmer or a supplier of Malawi mangoes. I've never transacted with Malawi. I have absolutely no connection, no trust, and I want to find a legal way to get mangoes shipped from Malawi to India. I don't understand blockchain, I don't understand stable coins. So, for a layperson like me, what would you recommend is the step by step process?
Well, it's very interesting. So, first off, to partly educate you, but to make you feel comfortable in the system, I'd say, do you do any other trading at all? Any other imports and exports? If your answer was no, I'd say AgriDex probably isn't for you. We're an enterprise solution. So it's built on the idea that you're a trader already. I'd say fantastic. Put on one of your pre-existing trade flows on AgriDex. So you are already buying, pulses from East Africa. You have a trader there and a good relationship with him. I'd say, well, both of you are using traditional banking systems, probably paying quite a lot of money, and using traditional lawyers to set up this chain. Put that on AgriDex. We'll subsidize it. We'll do it for free to show you how it operates. I would then do one trade using a pre-existing flow that you have to show you that it works, to show you how easy it is, to show you the cost saving and the time saving. We would do that, product would arrive, everything would go well. And I'd say, right now, if you're looking to use this system to expand out into Malawi, well, guess what? We have representatives in Zambia. I actually grew up in Zimbabwe and Zambia, so it'd be very easy for me to send people up to Malawi. We would do it on your behalf as a deal origination and growth point for us. We would go up to Malawi on your behalf, strike a deal with several of the local mango groups that are trusted in the region, and then start again from that point of view, which is you already have trust in our system. You're now paired using the pre-existing arrangements that I spoke about. Malawi and India are both based off English company law, I believe, anyway. So it's very easy for both sides to understand how AgriX is set up. You would be paired to the end buyer. You'd be paired to the end producer in Malawi. He would upload his documentation certifying that the Alphonse mangoes are what they are. He would choose the Incoterms. Again, I believe it would have to be FOB. And at that point, you as the trader come and take receipt of them and organize the offloading, the customs. But here's what's very, very interesting. You're now on selling it locally, right? I assume that you're on selling these mangoes to local traders. At that point, it may not make sense for you to use the AgriDex system because ours is not built for internal trade. So let's just say that you are on selling to another trader at that point in time. You received capital onto the AgriDex system using USDC. And at that point, we give you the ability to have a currency pairing into rupees into your local bank account. So you can go back into rupees and then reinvest it. But we'd have to create the pairing mechanism there.
Okay. And by doing this, what is the percentage on the total shipment value that you think I could possibly save by using AgriDex in case instead of my local connection of banks?
So the upfront costs of a trade lawyer range between 2 and 20,000 US dollars. So at a minimum, you're saving 2,000. At a high level, you're saving $20,000. So the upfront cost is already massively lower because you don't need the separate legal opinions that you used to have. Now, also factor in things like every time that you want to make a trade, you have to send documentation. You send it by DHL over to Malawi, documents are sent back to you. That's totally removed. So on every ton, that's probably about $150 to $200 per ton of mangoes that you're moving. And then the final one is the banking costs. I can't speak specifically to local Indian banking costs. So even if that's zero, you've already saved a lot of money. But let's say it's not. Let's say that there are some costs in wiring rupees into US dollars, into Malawian currency, into their local accounts, which I've seen that there is quite a cost. You'd also be saving that. And that will be on a per ton basis because you're doing consistent trade back and forth. But just on the upfront fees, it would be anywhere from 2 to 20,000 US dollars that you would save on that consignment.
So, how would AgriDex make money?
We make money in several ways. Usually, there is a currency pairing a lot of people like going from US dollars into their local currency. So on export earnings, we make a spread. If somebody's going from US dollars into rupee, most people want to go from rupee out into US dollars. So there's a currency differential split that we capture. So that's a small thing that we do for profitability. But the main ones that create profit for us are twofold. One is credit. We have a range of people who supply debt onto our system, and we aggregate that over to other traders and take a 1% spread. And then the final one is float itself. Whenever somebody goes into our system and sits in stablecoins, as Aditya said, those are backed usually by US treasuries. As we said, this is digital dollars. But US treasuries pay, and in fact, they pay quite a good yield at the moment because of inflation. They pay about 4 to 4.5%. So if you think that, look, at the moment, we're in growth mode, so there's only a few $1 million sitting on our system at any one time, but that still means 2 to 3 million US dollars yielding 5%, which is already, $150,000, $200,000 of clean income purely from the stable coins that are sat on our system, and that's only growing. So that's the main mechanism at the moment, is the float itself.
Okay. And Aditya, maybe I'd request you to come in here because you understand it from an Indian context as well. Imagine today an Indian trader wants to make payments. Do you think the central bank would be okay with any trader transacting in stable coins, and when they do convert that from crypto to say their local currency, have you seen any challenges that can possibly happen from a regulatory standpoint?
The part where Indian regulations are lagging behind is that we treat stablecoins and Dogecoin the same way, right? Like we don't see a distinction between a fiat dollar-backed one-for-one stablecoin and a meme coin that somebody just spun up out of thin air. There's already precedent now in the US, in the UAE, in a lot of financially mature markets for how you regulate stablecoins is the same way you would regulate the inflow and outflow of dollars, right? And this is specifically for fiat-backed stablecoins, right? There's all of this algorithmic and basket stablecoins which hasn't really worked and isn't proven out. So you can treat them differently. The easiest way to make this happen and to get AgriDex live in India tomorrow would be to say that just treat stablecoins like you treat dollars. The way that the Indian regulator could choose to accept this is apply your remittance and LRS and all of the both the limits and the policy that you have around that, right? And create on ramps for stablecoins to come into your bank account, right? The best part about this is that, like what Henry was talking about, the currency pairing, that is best done by a bank that already has a deposit base, right? The problem today is that because of lack of clarity, even if they want to, banks are not able to hold stable coins on their balance sheet. And so you have these third parties or other, like private service providers that hold rupee, like deposits and hold stable coins and do an off ramp or a conversion for you, right? And now many of these folks have to be registered with the FIU units and all of these, like financial compliance units, because they're basically doing some kind of forex or some kind of conversion, right? What would be much better specifically for fiat-backed and dollar-backed stablecoins is if we came up with a policy that said that if you're a bank that holds customer deposits, you can also hold these stablecoins the same way that banks hold dollar payments on behalf of customers, right? Let a bank hold these dollars and apply the same rules that you can hold them for 90 days, then you need to convert them and you need to convert them at a certain rate. Yes, you will end up eating up some of the benefits that come from stablecoins because banks will apply a rate that they choose, they'll apply a commission they choose, but it'll open up massive volumes. It'll open up space. Eventually, as more fintechs get banking licenses, they can build more competitive products that are designed around trade finance and like a lot of these things. So I think at this point, with the US making a 180 on like crypto regulations, we're bound to see more favorable regulations in India and in the rest of the world as well. And the first domino to fall, or the first way to make progress, is actually by just making stable coins legitimate in this form. By just treating them like dollars, you get to retain capital controls and you get to strengthen the exports and the economy of the country. So yeah, I think that's broadly how I think India should and will most likely think about stable coins in the next 12 to 24 months.
We also wanted to ask, what would it take for Henry's AgriDex platform to enter India with proper regulatory approvals? What kind of partners would you want from India? Is it that only talent is what you're seeking from India, on people who probably want to build something in blockchain, would that be helpful, or do you think there's something more we can do for you?
We would love to look at a sort of marketing person locally about AgriDex itself. Even more importantly, would be some kind of a local partner, somebody who can guide us into what needs to be done inside of India to onboard. I know I personally do want to do more in India, and I think whether it would be marketing or insights from a local partner, those would be the two things I'd be most interested in.